The first atomic bomb was dropped on Hiroshima.
Over humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
Okay, picture this. An Olympic biathlete races over hill and dale, crosses the finish line, collapses after winning the bronze medal at the Olympics, and then, instead of talking about the race, he announces his infidelity to the entire world on camera, as in, hey everyone, I cheated on my girlfriend. Sorry about that. Yeah, I didn't have that on my Olympic bingo card either. In social media world, that's kind of oversharing, can look like radical honesty to some, but in reality, it's a decision made under maximum adrenaline with zero time to think about the long-term consequences. Investors do a mercifully quieter version of this all the time. A headline flashes across the screen, a scary chart pops up on your feed, somebody on TV says recession, and suddenly people are making their own public confessions with their money. Confessions like, I'm done with stocks, or I'm going all to cash, or I'm chasing this thing that just doubled in value because, well, it just doubled in value. Yeah, it feels decisive in the moment, but like that skier's press conference, it often creates more damage than it prevents. The truth is, the economy is rarely as perfect as the best headline or as broken as the worst one. There are always mixed signals. There are always things to worry about. Your job is not to rewrite your entire financial life every time the news cycle changes. Instead of oversharing with your portfolio, come back to three simple questions. What are my actual goals? What level of risk can I live through a full year cycle? And does my current plan still line up with both of those first two questions? If the answer is yes, you don't need a dramatic speech in front of the cameras. You need patience, small adjustments over time, and the discipline to let a good plan work for you. After the break, I'll be back with this week's history lesson for the modern investor.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
On February 22nd, 1946, George Kennan's long telegram. This was one quiet memo in a very long game. February 1946, a chilly office in the U.S. Embassy in Moscow. There, a career diplomat sat down to write what he thought would be a careful explanation for a handful of policymakers back home. George F. Kennan was not a household name. Dare I say, he still isn't. He was not a general. He was not a president. But he was a thoughtful, maybe somewhat pessimistic Russia expert who'd spent years watching the Soviet regime up close. Now, Washington had sent a simple query. Why is Moscow acting this way? Why the hostility, the suspicion, the refusal to cooperate, even in the aftermath of the shared victory in World War II? Kennan's answer did not come back in the form of a soundbite. It came back as a 5,000 plus word cable that would later be called the Long Telegram. And in it, he argued that Soviet behavior wasn't a passing mood, and it wasn't a misunderstanding. It flowed from the regime's internal needs and ideology. The Soviet system, he wrote, was insecure, driven by a mix of Marxist-Leninist doctrine and traditional Russian fears about the West. And it was unlikely to coexist peacefully with that West on Western terms. So his recommendation was not a dramatic military showdown or a grand bargain sealed in a single summit. Instead, he proposed containment, a patient, firm, and vigilant strategy to resist Soviet expansion, build up the strength of free societies, and then let time and economics, as well as the internal contradictions of the Soviet system, do much of the work. In an era that would increasingly reward dramatic speeches and televised showdowns, the Long Telegram was the opposite of a hot take. It was aimed at helping leaders think in decades and not days. Yet over time, Kennan's memo became one of the most influential documents of the Cold War. It shaped the Truman administration's policies. It informed the Marshall Plan and the creation of NATO. And it provided the intellectual backbone for a strategy that, for all its flaws and missteps, Vietnam helped avoid a third world war in a nuclear age. Kennan later worried that his ideas had been reduced to a slogan and used to justify actions that he never intended. But the core of insight remained, because sometimes the most powerful move is not a public lurch, but a very disciplined long game. For modern investors and retirees, Kennan's Long Telegram offers us a useful counterweight to our current environment of instant reactions and public oversharing. It's a reminder that you don't have to respond to every perceived threat with a grand gesture. You need a framework, a sense of time, and the humility to accept that some problems are managed and never solved. Here then are 4 lessons for the modern investor from George Kennan's Long Telegram. First, beware of overly simple stories. In 1946, it was comforting to believe that the US and Soviet tensions were just a misunderstanding between recent allies or the product of 1 or 2 different and difficult personalities. Kennan argued that the reality was deeper and more complex. Ideology, history, and institutional incentives all mattered. In markets, we're often told that a bad week is because of some headline, or that a bull run rests entirely on one company or policy. Reality is usually different and messier. Inflation, employment, earnings, valuations, demographics, and policy all intersect and interact. So a good financial plan doesn't rely on a single simple story about why the market's always going to cooperate. It assumes complexity, and it builds diversification and flexibility around that truth. Second lesson, think in years and decades and not in news cycles. Containment was, by design, a decades-long strategy. Kennan didn't promise quick victories or tidy endings. He suggested that the West's advantages, economic strength, political freedom, and innovation, would play out over time if we avoided panicked overreactions. Your retirement legacy and charitable goals operate on similar horizons. Yet the commentary you see is built on daily or even minute-by-minute moves. If you judge a 30-year plan by this week's market swing, you'll be perpetually disappointed and perpetually tempted to fix what isn't actually broken. So aligning your decisions with your true time horizon is one of the most powerful forms of risk management. Third, private analysis beats public drama. Kennan's most important work was not done at a podium. It was done quietly with a clear head and a long cable. His goal was to clarify and not to perform. So in your financial life, the equivalent of the long telegram is your written plan. Your goals, your resources, your risk tolerance, your spending needs, and your contingencies mapped out and revisited periodically. That document doesn't need likes, comments, or retweets. It just needs to be honest enough to guide you when that next crisis hits. Public drama, big announcements about going to cash or betting it all because of a headline may feel decisive, but it usually reflects emotion more than analysis. Fourth, course corrections. We prefer those to wild swings. Even containment wasn't static. Over the decades, U.S. policy shifted through different administrations, treaties, and crises. There were missteps and there were overreaches, but the broad arc remained. Avoid catastrophic war, support our allies, and keep the long-term objective in view. Your portfolio and plan should work the same way. As life changes, health, work, family, tax law, we adjust. We may trim or add risk, rebalance, or rethink our timing. What we try to avoid are wild swings in strategy based on fear or euphoria. The measure of a good plan is not that it never changes, but that its changes are deliberate, proportionate, and anchored to your overarching objectives. Here's my final thought for this week. When Kennan drafted his long telegram in 1946, he could not have predicted exactly how the Cold War would unfold or when it would end. What he offered instead was a framework for thinking. A framework that included being patient, being realistic, and being, my favorite, grounded in history. And it was a framework that outlived him. Your financial life deserves the same treatment. In an age of instant sharing and constant noise, that quiet document and the discipline to follow it, that just may be the most powerful signal you'll ever send.